Welcome traders, Impact Trading Services. We are training on hourly volatility service, gold hourly volatility services. What we want you to do is go over to the YouTube channel and view on playlist, click playlist, download this guide. New York, the playlist will be NY session hourly volatility. Click on the video, then you'll download the guide. What you'll need to do is right click or cut and paste these links into your browser. Right click, and then if you right click and click on that, then you'll pull up the spreadsheet for December for the gold hourly volatility, and then you can right click here and pull up the guide for gold hourly volatility. Alright, so watch the video on how to use the guide. The guide is pulled up, and this is just for review. What are we looking for? We are looking for trends in the data during the trading session, during the day, during the week, and during the month. We're looking for trends in the data so that we can make how to use decisions. How are we going to use this data? We want to plan our entries. We want to plan our stop losses. We want to plan our trip value per trade. And then we want to plan our profit targets. We can get hourly specific, and then we'll look at trends. Now, this happens on a daily basis. So remember, go to the video, pull up the link, pull up the guides. Today we're going to practice December 3rd. December 3rd is our practice day through the 20th, through the 20 hour. Alrighty, so coming into the New York session, 1300, 1200, 1300. We see the day pushed up. We want to start with pulling up the data, but we always start with the daily trend. So 1300 on the 30th, 1300 has moved 500, 500, 430, 380. So that's roughly that's 590. That's 600, 550, 550, 400. So 400 is a good range for the 1300 hour. And then between last week, the week before January 3rd, price moved 700, 2500, 700, 1000, 1400, 500, 700, 500, 400. We have some 700s, 18, 19, 20. We have some 700 moves there, 800 moves there. 700, 500, 500, 700. So we're getting up into the 800 range. But we want to study this data so we can plan our 13, 14, 15, 16, 17, our New York session trading. Now we'll go to the charts. This day has already moved. We'll go to the day. January 3rd. January 3rd has moved 2,600 pips already once this New York session starts. How do we know that? We just measured 2,600, and on the hour of the 700 hour, that's the beginning of the 700. That is the beginning of the London session at 700. So the day has already pushed up 2,600. So during the start of the New York session, we already have a daily top, and the day has already moved 2,600. Now we also know for the day that we are entering into a monthly supply and demand area. These lines right here are monthly supply and demand areas. So we can expect a reversal during those areas because it's already entered into a monthly supply and demand area. We would expect a reversal in between these two lines during the New York session. Or we would expect a reversal close to this line here. Now why? We want to use all this data together so that we can plan our New York trading day. Now, our style is to wait until price moves up into a supply and demand area, and then we want to trade in the opposite direction because we know this is a supply and demand and a support and resistance area. We know once price gets to this area that price should reverse 1,000 to 2,000 pips because that's what it does every month. Every month, at the beginning of a month, when price moves into a supply and demand and support and resistance area, it always reverses because technical data does not lie. Why? There are institutional orders in these areas already placed. So when this day began, the institutions already drove the price all the way up to this area, and then there's orders here to sell, to take profit, to find stop losses. There's all these institutional orders in this area, so we know price is going to reverse during the New York session. And once we get our trade confirmations, then we're able to place great trades. All right, so let's pull up our data for 1300. Now we know prices came back. We have an hourly at the 12 o'clock hour. We have an hourly signal to go long here. So we should be long from here, pushing up into the supply and demand data based on these 2 hours here. That's an hourly signal. So you could actually go long here with a stop loss here. You could go long for the 1300 hour, and then you could place a stop loss under here. Now, if you want to fine tune it, you can go long here. What we do is when we enter a trade, we say we enter at the green. So we could go long 1300. Now if we went long 1300, let's go on the 3-minute chart. We're going to the third. All right, 1300. This is a 3-minute entry at 1257 long here. So we go long here. We would place our stop losses. If we wanted to do a tight stop loss, we could place a stop loss here. Or we could place a stop loss. Yep, or we could place a stop loss here. Now that's going to be depending on your risk management. You want to do 1.5 per trade, 2% per trade. Your risk management tells you where you want to place your stop loss. But you have good areas to place your stop losses in. This is a tight stop loss if you want to place a stop loss here. And then you know you have a monthly supply and demand that price just went up to here. So you can place a stop loss here on the 1300 hour. So once we have entered this trade long, what can we expect? Where are our profit targets? That's where we'll go to the data. So 1300, we've just entered a long trade on January 3rd. The previous week at 1300, the 1300 hour has not moved less than 500, roughly 500, 450 pips. That's 400, that's 550, that's 600, that's 550. So we could say 400 is a safe average move. The week before did way above 400, 700, 1200, 450, 750, and another 350. So our average is above 4 average. So as we've gone long here on the 1300 hour, what can we expect? Where do we want to place our stop losses? That's 700. That's 400 right here. That's still a 400 pip trade. Now the 1400, this is moving up into a supply demand area. Now we're going to get into our swing data. We know based on our New York session swings that the New York session swings usually go from 1,000 to 1,500. So once we hit in this area, right here at the 1400 hour, then we know we can safely place another trade in the opposite direction and trade down 2,000 pips. Now we would place a trade on the 3 minute here. And again, we're going to be doing 3 to 5 minute practice of trade entries at these levels. So we would place a trade here. And then our stop losses would be above here. And that's our trading methodology. Now, should we have been wrong, we would have been stopped out here for a small loss. And then we would expect to get into another trade here. Should we get another trade entry? Now, why would we be confident in this trade? We would be confident in this trade because this day has already moved on the 3rd. The day has already moved up into our supply and demand, our monthly supply and demand area. So again, this day are already moved 2,600 pips. 2,600 pips is a higher daily range for what the days are trending right now. That's 3,500, 35, 36, 30, 2,000, 2,000, 1,800. And these last couple of days only did, that's 1,500. And that is 1,200. So we would expect price to reverse. Again, why? Why would we expect price to reverse at the 8-5? This is a 50,000 number, 1850. Because it's the first time in the month that price has gone up into a supply and demand, a monthly supply and demand support and resistance area. How do we know that? And there's confirmation on the days. These are supply and demand support and resistance areas. So we'll go to the month. We'll scroll through the charts. And then we'll look. This area right here, before price got there, we had already mapped out as a reversal point, a possible reversal point, once price made it up here in the market. Possible reversal points. We can use weekly. This is a weekly reversal point right here. That's supply and demand, support and resistance areas. And we're going to do a thorough study of how to map these out before your trading session. And then this will give you the highest opportunity in order to be a very, very profitable trader. Alrighty, remove drawings. So we know this is a supply and demand, support and resistance area, a weekly and a monthly supply and demand, support and resistance area based on data. Alrighty. So what would we expect once price starts moving in the opposite direction for this trade? We would enter on the 3 here. Our entry would be right here. And this is a weekly and a monthly supply and demand support and resistance area where we know price is being resistant to move up higher. And then there is a lot of supply. And what we'll do is we'll place that green. So we would expect price to drop from here. And once we get this 3, that's a pin bar, 3 minute at the area. And this is a bullish engulfing bar where we would sell here. And then we would go to our data. We would need to look at the 14, 15, 1600 data to see what we would expect. And then we would also go to our swing data. We know usually from 1300 to 20, the New York session usually has 3 to 5 swings. Two of those swings are usually in between 2,000, 1,000, and 2,000 pip moves. So this has already moved. 1,300 has already moved 1,500. So that's one swing up. Price always moves up, moves down into supply and demand, order blocks, support and resistance, order blocks where institutionals are placing orders, and the New York session always moves up, always moves down, always moves up, always moves down. That's every day. So this first swing, we would expect price to move down. Why? Because price is actually forming a double top here. And that's another 3-minute trade entry at a supply and demand support and resistance area. And then price has already moved in the New York session, has already moved 1,500 pips up. So we place the trade, and then we'll go to our data. Our hourly volatility data for gold tells us that prices moved 700, 500, 400, 700 between the hours of 1400 and 1700. Prices moved 800, 500, 700. We have 2500, 700. That's 792, 800, 600, 1000, 1000, 800, 1000. So we would expect an 1,000 pip move in between these hours so we can plan our next trade. Now, we don't have to have a 1,000 pip move. We can have a 200 pip move. We can have a 300 pip move. But we know we can plan our trades now because we've entered a positive trade, and now it's just trade management. Now you have to manage your trade. We put our stop losses up here. We entered the trade. Our stop losses are placed right above the trade entry. Now, should we have been wrong here and we were stopped out because our stop losses were too tight, that's fine. We planned for that. But then we would plan for our next level up to place a trade in the opposite direction because it's a supply and demand support resistance area. But this trade did work out, and we actually placed this trade in a live trading account. Then we were done for the trading day. Now what you have to do is you'll have to set your trading goals, your daily trading goals, and once those goals are met, then start planning for the next trading day. But you have many opportunities during the New York session to use this trading data in order to be a very, very profitable trader. Again, this is another monthly, weekly supply and demand area where you could actually place a trade going into the opposite direction, a monthly supply and demand support and resistance area. How do we know? It's already on the chart. You see that? It's already on the chart. We know that these areas are historically supply and demand support and resistance areas. Technical data does not lie. That's every single day. And what did that allow you to do for this trade? It allowed you, and then you have a daily. Now this is an hourly supply and demand support and resistance area. That's hourly. And what did price do once it hit these lines? It reversed. And then you go to the 3 to 5, whatever entry you're comfortable with. We usually enter on the 3 or 5. Then you place the trade right here and place your stop loss underneath. And then you go to your data for the 1600, 1700 hour. This moved 1,000. We'll pull up our volatility data for the previous weeks, months. 1600, 1700. We have 700 pip moves. We have 1,000 pip moves. 400 pip moves. 1,800. 600 pip moves. 700. 2,500. 15. 700. 500. So in the last couple of weeks, 15, 16, 17, we see 200 is the low. 15, 16,000. We're in the 600, 700,000 pip range. Well, let's see what price did today. Price at 15, 16, 17 moved 1,000 pips once it entered the supply and demand area. Now you can enter on the 5. There's plenty of entries. This is a 5-minute entry. Let's clear that off so you can see it. This is a 5-minute entry. Stop losses are under here. This is a 3-minute entry right here. Stop losses under here. From here to here would be appropriate stop losses. And then this is a great 15-minute entry right here. Again, stop losses would be right underneath here to here. And then you go to your data. 15, 16, 1700, 1800, what do we expect? The data does not lie, and these are trends that have already been established. So you can use this technical analysis to be a highly successful, profitable trader on a daily basis. All right, traders, let's continue to practice. We will post more videos. God bless, and continue to learn so that you have financial success, financial freedom, and bless somebody in the year 2023. Impact Trading Services, gold hourly volatility data. See you in the next video.